Welcome to all of you. This is AK Asnari from Smart VRC. And as you are aware, today's topic is war, panic, and wealth. The estimated duration is about 30 to 40 minutes. So there is a standard warning from Smart VRC to all of you. Investment in securities market are subject to market risks. Read all the related documents carefully before investing. So our objective of this webinar is to help investors increase their returns by offering valuable stock investment insights. So, as I said, there is no recommendation this time. We are giving you only the insights. These insights are purely based on my long investment experience of more than 35 years in stock market. As you are aware, there are certain limitations on the number of broadcast messages we can send via WhatsApp. So we have started a new channel, that is a WhatsApp channel. I should not say a new channel, it is in operation from last more than 6 months. But those who are not into this channel, they can join via simply scanning this QR code. So this is precisely the status of investor portfolio nowadays. Indices and stocks are falling, and almost it is a free fall. Sometimes they are going sideways, but there is no support visible. And the reasons are not far to seek. Due to geopolitical conflicts, crude oil is boiling. It is already up by almost 50% during last 3 weeks. Also, the Indian rupee versus the dollar. Rupee is getting weaker and weaker. But if you look at the long-term chart, so this is for last 10 years, you'll find that there have been several occasions where rupee has weakened significantly, like during 2018-19, then 2021, and again between 22-23 there was significant jump, and then now in 2026. So in 2026, this weakness does not appears to be as significant as it has happened more than 2-3 times in the past. Nevertheless, yes, rupee has weakened. So, though I have written that biggest mistakes investors make in crisis, basically, I will not call this as a crisis yet. I don't see a panic yet. But yes, of course, investors are fearful. So, what are the basic mistakes investors make during such times? They sell quality stocks in panic. So, there should not be any panic. It should be very clear in your mind what you have to do. More about this will come into the later slides. Buying weak stocks just because they fell. So these are the times when the stocks where there is high level of speculation, they fall the most. So investors should not be mistaken that they are fundamentally sound stocks and they have fallen by 40%, 50%. So this is the right time to buy. Be very careful. You have got limited free money to invest, and you should invest in quality stocks. Following social media rumors is not required. Trying to predict the war outcome, it is really very, very difficult. Rather, I would say it is impossible to come to the conclusion when the war will come to an end. So, what should we do? And the last but not the least reason is over trading during volatility. Every significant move looks like this is the time to invest, this is the time to sell. Don't do like that. Have a comfortable posture, have patience. You will get enough opportunities, and you have already got some good opportunities. So we are coming to the poll first. What are you basically looking for in stock market? So option A is I feel uncomfortable and want to exit. Yes, quite possible. Option B is I am waiting for the right time to invest. Many investors, specifically my subscribers, they are waiting for the right time to invest, as I keep getting the messages. No exit, no fresh investment for now. This is also one of the stance the investors take during such times. So on your screens, you have got the opportunity to make a poll. What is type of investor you are? Are you A type, B type, or C type? Okay, this is going to be very interesting. So we are total 68, and this is a good opportunity to indicate your type of uh, investment behavior, rather I should say. So almost 50% of the participants have participated. I'm looking for at least 60 to 70%. So only 5 seconds more. Okay, we are finishing it. So here are the results. I'm sure you are able to see on your screen. Good 59% of the investors, they say that they don't want to exit, neither they want to make any fresh investment as of now. That is the option C. 36% go for option B, and 5% go with option A. Thank you for participating. So investor A, we will take one by one. Investor A, he feels uncomfortable and want to exit. Now there can be many reasons why he is feeling uncomfortable. Maybe he is in need of immediate financial funds and he wants to know when to exit. Or it is quite possible that he has never seen such volatility, high level of volatility and high level of loss. He has started investing during last 12 months or 18 months. So he may be losing his sleep. It is quite possible. And I know there are investors who suffer from high blood pressure during such times. Maybe because it is quite possible you might have borrowed the funds and invested in stocks. That could be one of the reasons. So every individual has a different kind of risk profile, and I would suggest to consult your advisor, financial advisor, for risk profile based suitable decision. Because without knowing that how much you have invested in other investment assets or how much is the debt in your investments. So what is exactly the issue? Without knowing that, uh, I cannot suggest you any action. Investor B is, I am waiting for the right time to invest. So this kind of investor believes that the good time is yet to come. Okay. Every individual may have different perspectives or strategies how to invest. What I have learned during these more than 3 decades is that one should divide the free available money into 3 or 4 parts. So here we are considering as 4 parts. And now, that is at the current juncture, you may invest the first part. So what I mean by free money, when I say free money, money which is not required for to meet any of your objectives for the next at least 5 years. And that is not a borrowed money. Yes, that is the free money. One should invest only the free money. Otherwise, there is a possibility of losing sleep. Now, what happens if I invest 15%, that one part now, and the market falls by another 15%? Then it is the time to invest the second part. And what if the market falls 30% from now? When I say 30%, that means index is presently around 76,000 points. So when index comes to 50,000 points. Yes, is it possible? Yes, it is possible. I'm not saying that it will fall by so much of percentage, but going by the past, it has happened in the past. So that would be the appropriate time to invest the third part. And what if the market falls by 45% from now? Then invest the fourth part. And in my journey, I have not seen more than 55 or 60% fall from the high levels. So if at all the situation goes that bad, then it would be a good idea to invest small amounts regularly thereafter, because your free money is already over. So whatever the free money you will get is from your business or from your salary every month. That would be a very small amount, I understand, compared to your portfolio. So these are the 4 parts. It is quite possible that after 15% fall, market may bounce back, or who knows, from tomorrow, I mean to say that from the next working day, our markets bounce back. I cannot predict. I don't have the expertise. Rather, I should say I never attempt to predict the market. There is a class of investors C who says no exit, no fresh investment for now. What should he do? So, if you don't have any free money to invest, you have certain options. During prolonged market declines, large-sized companies often tend to fall less than the mid and small-sized companies. You all will agree, right? So, basically, if the market falls by 10% or 15% from the high, then naturally the balance will get disturbed. Large-sized companies will have more weightage compared to the other small and medium-sized companies. So it is time to rebalance and bring the balance back to the original one. So there is a class of enterprising investors who are ready to take little more, who are more courageous, and who say that, who assume that as the market falls more and more, they get more and more opportunity. So they keep on reducing the weightages of the large caps, or rather I should say the large companies, and increase the weightages, allocations to small and medium-sized companies proportionately higher. So this depends on individual's risk profile. So smart investors don't react to the markets, they respond with discipline. What I have told you is a discipline. Maintain the discipline. Don't react. Don't react with every bump in the market. Now we are coming to the pole 2. For a long-term investor, as markets fall deeper, does risk decrease or increase? Oh, I hope you are able to see on your screen. For long-term investor, as market fall deeper, does risk decrease or increase? Once again, we are going to have very interesting results. So 5 more seconds. I give you 5 more seconds. Here the participation is higher compared to the previous poll. Total about 65% participants have participated, and the results are 83% of the participants say that it decreases. That means the risk decreases as the market falls. 17% say that the risk increases as the market. So basically, always it is an overreaction. Market tries to discount much ahead into the future. It is always like that, whether it goes up or whether it goes down. So the correct option is A. In the present circumstances, the current option is option A is the correct one. The risk is decreasing rather, I should say, as the market is falling more. But as I said, it all depends. As on date, it is low. Risk is low compared to what it was 2 months back. But if any major conflict happens, then market may fall more, and again the risk will decrease. Also, it depends on the sector specific. If the company is into the products which have direct bearing with the crude oil, I mean to say, if they have a raw material which has a close relationship with the crude oil, then definitely it is becoming more riskier. So as a whole, I'm talking about as a whole, as a market, and I say the risk decreases with the uh, fall in the markets. Basically, we must understand the difference between volatility and risk. If the markets move up and down significantly in the short duration, then in general, investors say that the market is very risky. No, market is risky for those who are short-term investors, but for long-term investors, it is not a risk; it is a volatility. So be very clear. At Smart VRC, we don't predict markets; we prepare investors because we believe that we cannot predict the market, but we can be prepared. So if this thing happens, what I have to do? If this happens, what I have to do? So we have to be rational. There is a smart pause, and I'm going to tell you about our company, Smart VRC. We believe in smart philosophy, and smart stands for S stands for the story. There has to be some story associated with the company where we are investing. Otherwise, why you are investing? What is specific about that company? Why you want to invest? So that company should report higher rate of growth in top line and bottom line in times to come. This is a story. That company might have a very dynamic CEO. That company might have huge order book. So that company might have some innovative product which is very rare. So that is a story. Then comes the market. M stands for market. Market is always your friend. Gives you an opportunity to buy low. It also gives you an opportunity to sell at high rates. So don't ever be afraid of the market. market हमारा दोस्त है. Then comes the assessment. There is the assessment of the stock, right? Assessment means the valuation. So at VRC, we use PEG ratio. Then comes the rational. You have to be rational, right? Every time you have to be rational. Market may remain irrational for very, very long time, or maybe for small times, but we have to remain rational every time. And last but not the least is the time. You have to give reasonably good time to compound your money for long-term investors. It's very much essential. So based on this philosophy, we have got 4 products. So one is portfolio, the first one, and the remaining 3 are individual stock recommendations. So in smart all cap portfolio, this was started in 2001. Smart gains was started in 1999. Smart gems in 2007. And the latest one is smart edge picks that was started in 2022. CAGR target is varies from 20% to 40% annual. Holding period is different. For smart all cap portfolio, this is a portfolio. Here we are going to run at least up to 2040. In smart gains, it is 3 to 24 months. It is the holding period. Smart gems, it is 2 to 5 years. And smart edge picks is more than 8 years. Yes, there is an exit strategy in all these 4. For every buy recommendation, you are going to get an exit recommendation as the time comes. With every product, we provide you research report, and the focus is always on the fundamentals, that is on the net worth, not net worth, on the worth of the company. Then comes the market cap focus. These are all cap. Frequency, smart all cap on Wednesday, smart gains on Wednesday, smart gems once in a month. And smart edge picks is opportunity based, but normally we recommend at least a stock in a year. Subscriber rating, as you can see, is pretty high. We have got 6 months plan, we have got 12 months plans. There are various other plans also. You can visit our website. So how we assist you? We assist you in several ways, not only in terms of the stock recommendations, but we also share our knowledge and wisdom, like in the present webinar. It is free of cost. Also, certain such features are available on our website, like calculators, like blocks. Then we have got mobile app. It's a fully functional mobile app on Android as well as Apple. That is iOS. And webinars, seminars, workshop, publication, blogs, podcasts, television, social media. Apart from this, I'm an author of the book Way to Billionaire, and this book is available in Gujarati as well as English. Those who are interested can visit our website, smartvrc.com, and they can buy online from there. So what are the key differentiators of Smart VRC? Myself, Dr. A.K. Asnani, and my qualifications are basically I'm an electronic engineer. Then I did ERA from ICFI Hyderabad, then MBA Finance, then PhD. I am registered with SEBI as a research analyst, also certified portfolio manager. After attaining financial freedom from a high-ranking public sector job, I quit to pursue my passion in PE. Another striking feature is our ability to estimate the stock's true worth. PEG ratio, the valuation tool we use, we have applied over 13,000 times to date. We are disciplined, fully rational investment approach we follow. We are always accessible and easy to reach. So this is about the Smart VRC differentiators. We send you the notifications, stock recommendation notifications via email as well as mobile app notification. And this is the format which you receive the recommendation. Smart all cap in specific, I would like to highlight, is a well diversified and has 20 stocks which are diversified in every sense, maybe in terms of the size of the company, maybe in terms of the sectors it represents, also in terms of the business houses, almost everything. And all are growth stocks because we believe in growth stocks, and all have a tempting long-term story. And as I said, changes are made only on Wednesday before 11 a.m. And since the value of the portfolio is very high, it is presently about 2.85 crores. So we have provided a tool with the name of your customized SAP portfolio based on how much you are interested in investing. So you can start even with 10 lakhs. Subscription process is very simple. You have to visit our website, smartvrc.com. There, under the subscribe option, you have to set your password, make the payment, and subscription begins instantaneously. Dashboard is very simple, and you can check the FAQs if you have any queries. And best, as I said, notifications are sent by mobile app as well as email. So this was all about Smart VRC. Now there is a very interesting chart. This shows 10 assets, investment assets, how they have performed in terms of returns from highest return to the lowest return in a year. And then at the end, right corner, there is a 10 years CAGR. I know many of you who are specifically on mobile, you may not be able to see the text because of the size font of this text is small. So for you, I have enlarged the picture in the next slide. But let me give you more clarifications here. All the investment assets, I should say the select 10 investment assets, they are marked differently from 2016 to 2025, like government securities, S&P 500, that is US index, then corporate bond, credit risk, gold, real estate, mid-cap stocks, large-cap stocks, treasury bills, and small-cap stocks. So here is the bigger picture. I have divided it into two parts. So these are the first 5 assets. The rest 5 assets are shown in the next slide based in terms of the returns they have provided. Like in 2016, GSEC provided the highest returns, 15%. In 2017, small cap index gained 57%. Similarly, in 2018, gold gave 24% returns. So in 2025, gold made 70.8% returns. So, and on the last column, we have 10 years CAGR. Here it shows that the top performing asset during these last 10 years in terms of CAGR returns is mid-cap index with 17.9% returns, compound returns. Second is gold with 17.2, and that is this slot could not have achieved this slot, but because of the high 71% returns last year. Then comes the small cap with 14.7% returns, large cap 14.4, S&P 500 13.7. So all this data was published in Mint, and the sources are Mint, Bloomberg, BSC, Value Research, etc. This is the second screen. Now, these are some observations. These are very interesting observations. So first is mid-cap. It topped the list, but never appeared in the top rank for even a single year. Is it not that interesting? That was the top performer asset for the last 10 years in terms of CAGR, but it never appeared the top slot for even a single year. So what matters is the consistently high returns maybe it may not be the highest returns in any single year, but consistency pays. Then comes the small cap, third best performer, despite appearing 4 times at the bottom. Out of 10 years, small cap index performed the poorest one for 4 years, and still it became the third best performer. Why? Because when it appeared at the top, it made significant returns, very high returns. And when it appeared at the bottom, the returns were not that bad. Then comes the real estate, appears at the bottom with mere 3.7% CAGR. Of course, it varies from city to city, even location to location. Also, one gets a rent, which is not included here. Nevertheless, its returns are the least with 3.7%. And one more thing, very, very interesting, except for 2020 and 2021, there is the 1 year, no asset has top performance for 2 consecutive years. So what happens is, I get a lot of queries. Shall I invest in gold? Why I get such queries? Because of the recency effect. Gold has given tremendous returns during last 12 months, or rather I should say 15 months. So, but what this chart shows, no asset has performed the best for 2 consecutive years, except for 1 year. Right? Wealth in markets is about how much you make when you are right and how much you lost when you were wrong. So it is possible that 20 stocks hit a stop loss and only one stock achieved the target, and still you made the returns. How? Because if each of these 20 stocks makes an average loss of, say, 5%, and the stock which hit the target made 120% returns, then still you are a gainer. That is the meaning of this line. There is a very important, rather I should say, very significant quote, very valuable, made by John Maynard Keynes, great economist. He says that market can remain irrational longer than you can remain solvent. So if you, that is what I have described in the previous slides. If you keep on investing with every say with every 3 or 4% fall in Sensex, then soon you will lose all your free funds availability, and market may keep on falling again and again for maybe several 3-4% more. So you know that market is irrational, but then it's market. You have to remain rational. So the winning strategy is, remember always, the price is the slave of earnings. Share price follows the growth in earnings. And secondly, remain fully invested all the time in top 20 exciting stories at attractive valuations, really diversified. Yes, I know many of you may be highlighting this word, fully invested. If you are fully invested, then how? How to have free funds now? Yes, free funds, as I said, there are ways. Every month you must be saving some more from your salary or from your business. Secondly, always you can make changes in your portfolio by increasing the weightage of small and mid caps and reducing the weightage of large caps. We follow the same strategy in smart all cap, and subscribers see the results. At Smart VRC, we don't chase the returns. We build the mindset that creates them. Yes, mindset should be, it is the psychology, it is the investor psychology which plays a very crucial role. We can identify good stocks, we can identify quality stocks at attractive valuations. It is your emotions, it is your control over greed and fear which decides the returns. So our work is not only to recommend the stocks, but also create a mindset that what to do now and what not to do. This is a feedback from Mr. Jainam Shah from Ahmedabad. He attended one of our seminars in Ahmedabad. He says that seminar and your book, Way to Billionaire, have been pivotal in shaping my approach to investing. I don't think I would have had the conviction to invest everything I had during the 2020 market crash, my first major crash and the first pearl, if it weren't for the wisdom and confidence I gained through your teachings. It wasn't a large amount back then. It was almost everything I had. Thank you so much for everything. Now he has used the word first pearl because at that time we had a webinar like this where I said that in a lifetime you will get 7 or 8 opportunities to pick the pearls. And I say to pick the pearls means pearls will be available at very, very cheap rates. And every 6 to 7 years, you will find that there is a one crash on average. Every 6, 7 years, you will find. See, in 1991-92, there was a crash. 1998, there was in 2000, 2008, then 2020. So during these crashes, you get an opportunity to pick the pearl. Thank you, Mr. Jano. Once again, those who are not into this channel, I request you to scan this QR code and join the channel. Like the information about this webinar is also shared in this channel, and you will get about 3 to 4 insightful updates in a week. Now we are ready for question and answer session. There are 2 ways you can ask the question. One is typing your question in the chat box, and the second is raising your hand using the reaction feature on the Zoom. If you want to ask the question, you can raise your hand. And could you, in the chat box, Mr. Lakshmana Swami, could you please repeat the 4 parts of deploying money? Kindly repeat once again. So you can divide your free money into 4 parts. Now you can invest the first part. Second part, you can invest after 15% decline in the market. Third part, after further 15%. And fourth part, after further 15%. So this is my strategy. This may or may not suit you. I am telling you this from my own experience. This works very well. And this has worked very well in the past for me. Any view on HDFC Bank problem? So you will, Mr. Devang. Okay, Mr. Devang, you will appreciate that we have not recommended HDFC Bank from the moment when the HDFC Bank and HDFC Limited were merged, because often I have seen that the big mergers are not successful. And regarding the HDFC Bank, recently the top executive has quit. Apart from that, I don't have any other information. View on India's largest private bank issues. Is it time to grab opportunity or stay away? As I said, I normally keep stay away during such things. And that is the best strategy I have found. स्मॉल कैप पोर्टफोलियो अभी डाउन ट्रेंड में है, तो क्या उसमें टॉप अप करके चले? सो यू कैन अप्लाई द सेम थिंग. what I have said about the market. Whenever the smart all cap portfolio falls down by 10% or 15%, you can invest more. So presently it is down by, I think, about 14% from the historic high. The rest you can decide based on the amount of money you have. Not able to see the icon to raise hand. Which sector will be focused after the war ends? So that depends when the war ends. Nevertheless, I find that the power sector is going to have good times for several years. Not only because of the domestic demand from the consumers and industry, but also from the data centers. For beginners, guide how to start and minimum amount required. So how to start? So you can start with. I would prefer to invest for long term. Don't go for short term investments. And regarding the amount, that is up to you. There is no limit, neither on upside nor on downside. The only downside limit is depends on the price of the share. So if you decide to invest in MRF, then you must have more than 1 lakh in your kitty, even to buy a one share. Can we sell gold investment and invest in equity means reallocate our portfolio? Can we sell gold investment and invest reallocate our portfolio? Increase our equity exposure. So that depends on your strategy. So that is one strategy which I keep on repeating again and again. One should have about 20% of investment in gold of the total investment in assets, 20% in gold. So if you have followed that during last 1.5 years, that 20% must have increased to 40%. So you have to maintain the discipline. So one way of that is to cut short your exposure to gold and increase the exposure to the other assets, maybe equity or anything. So that is the best strategy I can say. Which sector avoid now? Yeah, definitely. This is a very interesting question. Sectors to avoid now, definitely those which are already impacted by the events, probably in gas and oil sector, that can be very risky. So if you are highly risk taker, then you may consider a small investment in that. Otherwise, you should avoid. So in stock market, if you want to make great wealth in the long term, nothing very special you need to do. Yes, only you have to maintain your discipline, maintain your emotions, and don't do anything stupid. When I say stupid means just on the hunch, you believe that the market will fall, so you short sell the large number of shares. Don't do such things. Otherwise, all your compounding may get erased in a matter of few days. So the stocks recommended in your one of the queries is the stocks recommended in your products are almost all are in red. Yes, it has to be in red. All my portfolio is also in red because the market is like that. It is not because of the poor performance of that companies. It is because of the whole market. So there are two factors which move the stocks. One is the performance, and the other is the market. In the short term, market has a upper hand. If the market falls by 1,000 points, I'm sure 1,000 points Nifty, I'm sure all the stocks will be in red. Maybe one or two, maybe of the likes of some pharma stocks or FMCG may have a small positive returns. Otherwise, all are going to be in red. So nothing to worry about. If the stocks are good, if the fundamentals are right, if the story interesting and attractive, then we have to remain invested. And as you must have observed, in many stocks, we have lowered the stop loss because we don't want to get to sell those stocks in the strong fundamentals. What you feel about AI in IT sector? So, as far as the AI in IT sector, we are the we are using the AI. We are not yet creating the products, AI based products. So the main beneficiaries are who are who are the creators of AI. So maybe in times to come, our companies, our even individuals or startups may start developing the products, AI based products. That could be the right opportunity. Regarding the IT sector, yes, I truly believe that it will have a major impact until unless the big IT companies they scale up their AI operations and become innovative. NCC stock has highest order more than company's capital, then also stock fell more than 50%. Their issue with infra stocks in India. None of infra stock is performing except L&T. So it's not like that. As I said, there are two factors. One is the market, other is the company itself. So NCC management, they themselves have said that they will grow, their revenue may grow at the rate of 15%, while the market expectations were higher. And that may be the reason why it is underperforming. So I am Smart Gains subscription holder. During this toppy market, I am able to make profits of XXX X in this financial year. Still, some losses stocks are there in the portfolio, but a big thank you to you. Okay. What is your view about ETF junior Bs is below 18p, which is historical low? Is it valuable and simple to use? So regarding the P, historical P has we don't believe in historical P relevance because P should always be compared to the future potential growth. So with that in mind, I would recommend that you should, if you expect that the Nifty Bs, junior Bs stocks are going to grow at the rate of more than 15% per annum as an index, then definitely it's a good investment. There's one more query. G Vernova TND India Limited, how much is invested in such stock? So this stock has, I think, more than doubled during last 1 year, in less than 1 year. And what happens is, suppose initially if you have a weightage of 6% in this stock, and during last 10 months or so, the index has fallen. I'm sure the rest of the stocks must have also fallen. And this stock is more than doubled. So if you have not made any changes in this stock, then its weightage must have increased to about 15%, which is which I don't prefer. As per my philosophy, one should not have more than 8% or at the most 10% weightage in a single stock, but 10% is extreme. Normally, I don't go beyond 8%. So it is up to you. If you are ready to take risk in terms of it can happen to any company in any way. You couldn't have expected, like in HDFC Bank. No one expected day before that resignation. No one expected that it's going to happen. That tomorrow HDFC Bank will fall by 5%. So that risk will always be there. How to find out the stories and how you are finding the stories? Any reference? Yeah, there are many ways to find the stories. It comes into the business magazines. It comes into the Economic Times. They appear in business magazines. I said Business Today, and even in capital market. Even on day-to-day basis, you will hear the companies are bagging the orders. They are making tie-ups. And the other thing is you can monitor the quarterly results. Whichever company are reporting more than 20% returns on quarterly returns on year basis, you can go deeper into that. Nowadays, you can use AI also to find out the stories. Yes, AI has made our task very simple. And I say our means all of us. Not at all. I'm not saying about me. Is it investing? Is it worth investing in IT sector now or better to wait for further fall? Um, the best answer would be we have not recommended any big IT company from I can say last many years. He has not quoted his name. It is a market investor. Your advice are always simple. I highly recommend everyone to try occasionally. It's simple and it's a lot of research. I've been using this product and this effects. Okay. Yeah, we always keep it simple. As you must have observed that our presentations are simple. Our guidance is very simple because creating wealth is simple. We investors make it complex. That is my experience. So, what is our strategy on war situation? Our strategy, as I said, is very simple. We don't try to predict what is going to happen tomorrow or day after tomorrow into the market or into the geopolitical conflict. Yeah, there are always case scenarios you can build up, but you cannot blindly say that yes, war is going to end next week. No, not at all. So we prefer waiting for the event to happen, and then in the meantime, we take on suitable corrective actions. Not that we will wait till the war ends and then we will ask you to invest your free money. That also you can do, but then we all know that after the end of such great conflict, market will rise suddenly. You will not get a chance. Markets falls due to some significant reason. Is not without any reason. Market will not fall by 10% or 50%. There will be some reason, and that will create fear into the minds of the investors, and that is the time to stop to keep to identify the stocks we are going to invest. And when the panic sets in, that is the best time to invest. So as per me, panic has yet not set in, but yes, opportunities are still there. And I said, you can divide your money into tranches and invest the first one now. So Mr. Vijay Gupta, you can unmute yourself. Yes, Mr. Vijay Gupta.
Yeah.
Yes, tell me.
Okay. Thank you, sir. Thank you, sir.
Yes, tell me.
Yeah. My query is that I am a subscriber of Smart Gain as well as Smart Gems, both
Yeah.
portfolio.
Yeah.
And in Smart Gain, I face some issues while maintaining overall percentage of stocks in portfolio.
Mhm.
So to maintain the stock which are rising by selling some quantity, I maintain. But in stock which are falling, I used to purchase at lower rates also, in between stop loss and recommended price.
Yeah.
But in that case, what happened that day by day, it came just near to stop loss, or in some cases, stop loss triggered.
Yes, yes, yes.
So what I am thinking is that can we have two level of stop loss? So as in first stop loss, one should not buy further quantity, and to watch the performance of company for few months. So as we can minimize our losses.
Okay.
But,
Understood you.
but we are but we are not able to identify these levels. That's why I'm asking you.
Okay. I can understand your challenge.
Thank
Suppose we recommend a stock at rupees 100 and we have a stop loss set of say rupees 80 and it falls down to rupees 90. So from our side, there is no notification, but you want to average average the stock. So you buy again at 90. And when it reaches to 80, we are making an exit. So you are making double losses, double or 50% more losses. So because initially we say that you can have a weightage of about 5% uh, in every stock. Because on average, there are about 20-25 stocks open recommendations. So with 4 to 5% weightage in each stock, you can deploy your full money. I do not recommend you to increase the weightage. Of course, it depends on your risk taking capacity. But I personally do not recommend increasing the weightage. And if at all you are trying to average, then average when the stock is down by at least 15% from the recommended price. And the funds you allocate should not be more than 20% of your initial investment. That way you can restrict your losses and increase your profits. That is the best I can tell you. Regarding your suggestion of a stop loss 1 and a stop loss 2, that is prevalent in technical analysis, and we are into the fundamental long-term investment, medium to long-term investment. So we cannot go for SL1, SL2. Actually, we are thinking of removing the stop loss, and we will give you the exit whenever we feel necessary. So that is all I would like to say on your query. Yes, Mr. Khalid Shah, kindly unmute yourself.
यस सर हेलो
Yes, yes.
हेलो हाँ सर मैं ये पूछना चाहता हूँ कि एनर्जी और पावर सेक्टर
Mhm.
तो जैसे क्रूड का प्रॉब्लम है क्रूड महंगा हो जाएगा कुछ भी होगा तो क्रूड पे इफेक्ट आ रहा है तो
Mhm.
एनर्जी पावर में क्रूड का डायरेक्ट इम्पैक्ट कम होने का चांस लग रहा है ऐसा है
नहीं, जैसे सोलर पावर है, विंड पावर है,
यस सर
थर्मल पावर है, तो एक तो हो गया है कि
हाँ जैसे
जो पावर जनरेट करते हैं,
यस
और एक होता है कि जो इनको इक्विपमेंट सप्लाई करते हैं।
हम्म
तो इसमें गैस और क्रूड का कोई डायरेक्ट ऐसा बहुत ज्यादा सिग्निफिकेंट इम्पैक्ट नहीं होने वाला है।
हाँ सही है ओके बस यही जानना था कि उसमें थोड़ा फायदा ज्यादा दिख रहा है आगे जाके सही है यही क्यूरियोसिटी थी बस थैंक यू सर
Thanks. So with this, we have come to the end of today's session. Thank you very much, and thanks for the questions. Because if you ask a question, I am very sure there are at least 10 more participants who have the same question, but they don't ask. So I request you to ask more and more questions so that you only benefit more and more, not only you, other participants also get benefit. Thank you. Thank you very much.